Welcome back to the QX Financial podcast. Here, I'm Charity Allred, and here we have our CEO, Janko. So welcome.
Hello.
So today we are going to be talking about frequently asked questions that we tend to receive about life insurance as a product and as a protection strategy. Okay, great. This is a question that we get a lot. What happens to my policy if I miss a premium payment?
It's a great question. And it happens going back to what I said earlier, the life doesn't go perfectly all the time, right? Where you can just go 50 years paying for something and never had a bad month or too much debt or unemployment or anything like that. So the real answer, it depends on the kind of contract you have. And that's why it's important to either reach out to us or work with a financial professional that understands these contracts. Because literally, depending, every contract is going to be different. So depending on whether it's term or whether it's permanent, whether you have cash value or not, whether your policy allows automatic loans or not, there's a lot of ifs and maybes in that question. But I'll tell you this: if you're buying permanent insurance, you cannot not pay a premium. It's like car insurance. You don't pay for it. A lot of companies will give you 3 days to catch up. Otherwise, the policy lapses and you lose your coverage. On the permanent end, if there's cash value involved, you can actually use a portion or all of your cash value to pay premiums in order to keep the policy alive. But there has to be equity on that contract. And the only way to know if there's equity on your contract is to look at your statement, look at your most recent illustration in force, and that's the only way to know. So it is a bit of a complicated answer. All I can tell you is reach out to a professional who can do the analysis for you and tell you this is what you can do. I'll even take it a step further. Sometimes when you call the company, they don't know themselves. So that's why it's important that you have a professional helping you.
Okay, great. Going back to the cash value, can I access the cash value of my policy while I'm still alive?
That's another great question. And if you have permanent insurance, as in a whole life or universal life, again, I'm generalizing. There's different kinds of loans. There's a multitude of different types of loans and things you can do. But I think most of it summarize in two things. You can make a withdrawal, or you can take what is called a policy loan. A withdrawal is exactly what it is. You have equity on your policy, you have positive cash value, you call them and you withdraw some of that money. Now, what you gotta be aware of is what are the potential drawbacks of making those withdrawals. They could be decreases in that benefit. There could be decreases in paid up additions insurance. If you have an index life, for example, you could be leaving interest on the table that was about to be earned, and depending on the block that you wear, depending on what is a look back or point to point. Again, it gets complicated. But bottom line is there's an effect to do so. The other option is to get a policy loan, right? So that may prevent some of the negative effects of a withdrawal, but it may create others depending on the type of loan that you have. So I guess again, I go back to the same thing. If you have an agent or an advisor working with you, make sure that I explains to you what are the different types of withdrawals and policy loans that you have access to. If you don't have an advisor, look at your policy. There's an actual document that you receive with your policy. All the information and ins and outs of a policy loan should be there. So you should know exactly how it works. But however, if the language of the contract is too convoluted or too legalistic, once again, reach out to a professional that can translate that for you.
Okay, great. Next question, what are the tax implications of life insurance benefits for my beneficiaries?
If it's structured correctly, the death claim that is paid to your beneficiary should be income tax free. But again, there's an asterisk in there if structured correctly, because there might be state issues, there might be probate issues if it's not done correctly. I mean, I've been in situations where the clients bring their policies to me to review, and there's actually no beneficiary name. So if there's no beneficiary, the policy the money will go to your state, and now you're subject to probate. That's a problem, right? So I've seen other clients with beneficiaries that are not even around anymore because they are dead themselves. So be very careful with who your beneficiary is. Again, work with a tax professional, work with a financial professional. But if it's structured correctly, most of the time, the death benefit should go to your heirs, including your spouse, on a tax-free basis.
Okay, great.
Mhm.
And how do I choose a reliable life insurance provider?
Uh, that is a bit of a complicated answer. So there's no like system to do that. Just Googling or looking at ratings probably is not the best way to do it. Uh, so I guess I'll give you two methods as a consumer that you can use that could be effective. The first one is the brand, right? We see brands on TV all the time about life insurance. So you can make a good assumption that if they're on TV, they have a good marketing budget. They tend to be a stable company. I know it's not a perfect way to look at it, but it is a good way to understand the life insurance business, right? If the company has positive cash flow, they're probably investing in marketing, and that's why you hear them around and so on and so on. But I understand the potential problems of that strategy when choosing your life insurance provider. I think the only real answer is to look at something called the Comdex, COMDEX. You guys can Google it. Comdex actually creates a hierarchy of insurance companies based on financial stability and financial health. And I will say the first top 20, it should be over 90 out of 100. I don't have it memorized, but your first 10, 15 companies, maybe even 20 companies on the list should be a good group of companies that you can choose from. From that point, if you don't want to fully rely on the Comdex, then you can actually look at the balance sheets yourself. Most companies are either publicly traded or they have some sort of reporting obligations to your state insurance commissioners. They have to report their financial standings, their balance sheet, and so on and so on. So if you know how to read a balance sheet, you can go to the company's website, download their financial reports, and then based on that, you can see, is this company in good shape? Is this company is over leveraged? Is this company paying the debt claim they say they're going to pay? And so on and so on. You also can look at your commissioner's website, see who, what companies are being fined, if there are any complaints about them not want to pay benefits, and so on and so on. But in my experience, in my 16 years, I will say that most companies in the Comdex, obviously there are exceptions, but most companies on the Comdex, if they have a good rating, they're going to have a good product to sell you. They're going to have a good permanent policy to convert to. They're going to have good financial standings for the long term. You're going to have companies in there that have been around paying benefits for over 100 years. You can find that kind of track record in other financial institutions like insurance companies. So that should give you a lot of peace of mind that, okay, I'm putting money with somebody who will be there, will be here 40, 50 years from now. A lot of the times we cannot say that in other areas of financial services, but you can definitely see that and say that on the life insurance side.
Okay, great. Last question we have today is how does life insurance fit into my overall financial plan?
Well, it depends. It depends what your financial plan is all about and what do you want to accomplish. But life insurance provide a functions beyond just paying a death claim. It can provide a role in your asset allocation. It has a role to play in your retirement plan. It has a role to play in how you take retirement distributions from qualified plans. It has a role to play when it comes to your long-term care and potential financial liabilities, even in retirement. And it definitely plays a role in learning how to live free of debt, right? And how to use post loans and how to use financing properly to live debt free. So you stop paying interest to other people and you start earning interest yourself. So financial life insurance, like other financial instruments, is a financial tool. They can be used in multiple ways. But the way in which you will use it It will depend on, once again, your situation, your objectives, all that. So I know when we say life insurance, people tend to laugh and they roll their eyes out. Here we go, because it's seen as a commodity that needs to be sold. And yeah, people do it that way. But if you go beyond the stereotype and you actually open your mind and listen to a professional, you'll start to see that financial instruments can play multiple roles for your benefit. And in doing so, can save you a lot of money, can save you a lot of trouble, and will make your dollars work more efficiently. So that's the way I will answer that. So again, work with a professional, someone that you trust. It can be us, I hope. If it's not us, find somebody else. But it is a complex area. You need help. I will close with this. If financial planning was easy, we wouldn't exist. And most people will retire successfully when, after working 30, 40 years. And obviously that doesn't happen because it's not easy.
Great answers. Once again, thank you for your insight and the great information. We would ask that the viewers here please like and subscribe so that we can continue to provide you great content and great education. So thank you, Yanko.
No, thank you, Shadi, for the great questions. And for the viewers, if you found these of value, let us know if we can be of any help. Otherwise, we'll see you on the next one.
All right, bye.
Bye.